Good afternoon, Dumelang Absheni Molweni. Hello, and welcome to the Nedbank and the American Society of South Africa's Property Finance webinar. We're speaking about a sector that would be valued at around 29.6 billion US dollars in 2028. It's a sector with the oh my gosh views and the absolutely amazing artistry and architecture. We're here today to try and make sense of what it does look like to be an external or foreign investor in the South African property market. We welcome you to the webinar, and please do take the time to use the chat function that is available. Top left-hand corner of your screen, I do have an iPad, so don't think that you're typing to the ether. We will be able to see all of your comments. I have a wonderful panel here with me, and we are definitely going to discuss this and make sense of what are the regulatory and financial requirements. Why don't you start us off by just typing in the chat function where you are watching this from. Just give us your city, your state, and the province, and we'll be able to take it from there. But to kick us off, we have an esteemed travel curator, the Vice President of the American Society of South Africa, and a film industry expert, a founder of landmark attraction, Sparkly Mkhosi, is currently busy with an iconic observation wheel installation across South Africa, and is also an award-winning associate producer for Sides of a Horns, with a passion for continuous learning and outdoor education. And then after Sparkly, we'll also hear from Alana Foster, the president of ASA, also known as the go-to person for enhancing brand visibility and forging meaningful partnership. Her expertise spans fashion, music, art, technology, and more. You'll see in the way she's dressed why she wrote that. She's a sought-after speaker, host, grant and business proposal writer. She's been appointed as an executive board member to the Friends of the Hector Peterson Museum Foundation, and that really showcases her commitment to observing and preserving South African history and heritage. So over to you, Sparkly and Alana. Good afternoon.
Good afternoon. Thank you, Katlego. It's an absolute pleasure to be here at the Nedbank headquarters in collaboration with the American Society of South Africa and Nedbank. I'd like to firstly say that the American Society has been in South Africa for over 24 years and started as an organization helping expats to settle into the country. Not only that, since we've been part of the board, we've built bridges to ensure that American and non-Americans are able to work together in such program as such a webinar. But on this note, I'd like to also thank Nedbank for making this possible. Without the team, it would have never been possible to bring this collaboration together. Thank you.
Thank you, Sparkly. Yeah, this is a really incredible moment because this started out as a conversation when you were attending one of our monthly events called a 3T every third Thursday. As a member, we get together. And what we found that a lot of our members had topical inquiries in regards to this webinar. So thank you very much for bringing together such a wonderful group of minds that can maybe, help answer some of the issues that came up, such as exchange rates, ownership regulations, bureaucracy and paperwork, property rights and title deeds, local market knowledge. I know we're going to get some great stuff around that, and financing.
Thank you so much, Alana. I think that perhaps do you want to maybe address what are some of the other things that maybe you wanted to sort of chat around, some of the, if you will, concerns that may have been there from the expat community around property investment in the country?
Well, I'm excited for them to get a view on what are the benefits of investing in the South African property market, especially right now with the state of the nation. It's very sensitive, pink elephant in the room. And then, just legal requirements for non-residents, I'm sure you can help us with. Real estate agents, and especially what Nedbank services there are available. That's what's really important about this webinar today, is having found out that Nedbank actually specializes in this space. I'm very excited for our members and viewers to kind of get that information.
Sure. Thank you so very much. We definitely are appealing to that audience. We do have a Kenneth Rose from Atlanta, Georgia, so definitely quite an interesting international audience that we have. Please do remember to type in that chat box where you are listening from. But we definitely get to up next hear about the broader economic situation that you were referring to, Alana, in terms of where the country finds itself. You'll remember interest rates being kept unchanged there. I hope that remains for a long time, or perhaps it comes down. But the person to tell us even more about that is our Group Chief Economist here at Nedbank, Nikki Weimar. Soon after receiving her master's in economics from Stellenbosch University, she took on the position of economist that was advising government on economic procedures and policy up to the level of the presidency at the time. She's been providing knowledge in a range of fields within economics, sector analysis, fixed investment trends, and the relationship between these trends and financial market developments. So, Nikki, perhaps a little bit of a view from you on the property market and what's going on at the moment.
Yes, so I mean, you're referring to the South Africa's economic situation, and it is a fragile topic because it's a fragile economy. I think we are in a tough spot at the moment, so I don't think there's any point beating around the bush as far as that's concerned. And foreigners are very well aware of that and often highly informed about the situation in South Africa. So we've had a period in which obviously over a decade, you could say, in which economic activity is, of course, stagnated. It has slowed quite significantly. One of the key factors holding us back has been the rise in state capture over that period, and, of course, the corruption that led to. That has had certain consequences for South Africa. We got grey listed in the early part of this year by the Financial Action Task Force. And one of the implications of that, of course, and I'm sure the experts can elaborate on that a little bit more later on, is that for anybody coming into South Africa, there is now more paperwork, unfortunately. And the most important bit there is the know your client element, that we have to be able to verify and validate where money comes from and what the origin of that money is. So that's one setback we've had, which is, of course, a function mostly of that decade of state capture and the corruption that led to. The biggest constraint on economic growth in South Africa remains our electricity shortage. That is both an opportunity for the economy to change, to adopt new technologies, to diversify its electricity provision, but at the moment it is a restriction, it is a constraint, and it is weighing on economic activity. Within the context of all of these challenges that South Africa has experienced, the reality of the matter is that we've actually managed to hold on to growth. It's not like we've entered recession. The property market has been fairly resilient, like almost everywhere else in the world. What we have seen is post the pandemic or during the pandemic, demand for residential property picked up quite sharply. South Africa saw nice increases in property prices during that period. And for the first time in a long time, in fact, for the first time since the global financial crisis, we had residential properties growing in real terms. In other words, after adjusting for the effects of inflation. We saw very strong growth in demand for mortgages over that period, and encouragingly, I think, from a broader perspective in South Africa and from the need for transformation, for the first time we saw a big pickup in new bond applications, new homeowners, and specifically black homeowners. And I think that's fairly important. So the property market at the moment is slowing a little bit. House prices are slowing. We have seen demand for mortgages ease. This, however, is not unique to South Africa. It's happening in the United States. It's happening in Europe. It's especially happening in the United Kingdom. And it has a lot to do with the fact that the world at large, including South Africa, has experienced a very significant acceleration in inflation. And with that, monetary authorities the world over have had to take actions, and one of the actions they have taken is that they've hiked interest rates. In the case of South Africa, inflation moved up to a peak of 7.8% in July last year. So not nearly as bad as, for example, the UK experience, where they had double-digit inflation rates. But nonetheless, South Africa's underlying inflationary pressures tend to be stickier than advanced countries. And it is now starting to come down, but it's coming down slowly. And the latest reading we've got was that inflation eased to 5.4% in June. And of course, with that, the Reserve Bank have responded. We have a very hawkish Reserve Bank. They understand that our inflation dynamic can be trickier than in other countries. And so they've moved very aggressively. And as a result, we have seen a 475 basis point hike in interest rates. That is dramatic, all right? So that has taken your prime lending rate up to 11.75%, and that would seem very high to any American. It would seem very high to any citizen of an advanced country. For South Africans, it's kind of just slightly above what was the pre-pandemic sort of average. It used to hover around 1025, 1050. It is above that, 1175. So at this level, it's going to affect house prices. It's going to affect demand for mortgages, and we're already seeing that coming through. But again, we're not anticipating any kind of implosion. Part of the reason for that is because house prices in South Africa and property in general in South Africa are not overvalued. It's good value, especially for the size you get. And despite the difficulty we're in at the moment with high interest rates, what we're anticipating is that you will see in certain areas in South Africa, especially coastal areas, prices keep rising. And demand for coastal property remains very strong. And it has a lot to do with the fact that, we have uninterrupted coastline, we have pretty clean oceans, pretty clean beaches compared to many other parts of the world, and property is still very affordable on the coastal territories in South Africa compared to other places. So there you're still seeing continued resilience, continued demand, and we don't expect that to change. But in your urban areas, inland urban areas, you will see property demand slow, and you will see prices slow but not fall apart. We expect things to start picking up from around the second half of 2024, and the main reason for that is that we believe that we've probably seen the worst of the hike in interest rates. Katlego, you can relax. We're not anticipating another one.
Thank you.
There's always that risk,
Yeah.
depending on what the US Federal Reserve does this afternoon. But generally speaking, we do think in the case of South Africa, interest rates are restrictive enough to control inflation. Inflation is starting to move down in a more meaningful way, shifting down a gear. And so as a result of that, we believe we are at the peak in interest rates, and the next move will probably be down. But unfortunately, people mustn't get too excited. It will only come probably around March next year when they'll start cutting interest rates.
I think just dovetailing off of what you said, you spoke about issues of electricity provision as a bit of an opportunity. You also spoke about the affordability of property, and we're speaking around the investment case at the moment. If a dollar is 17, 18 rand or so, that means that you're getting the price of the property at a way cheaper rate. Are you starting to see a lot more in terms of that particular sector of investment, foreign nationals coming into the country because these places are beautiful, the houses are great, it's great land, but it's even more affordable for them because I suppose as our rand weakens, so their currencies are getting a bit stronger and stronger.
I don't think we're seeing that much of it, but you can probably answer that in greater detail. Yeah. I think South Africa is still an underinvested real estate opportunity, in my opinion.
Sure.
I think foreigners have still not entirely caught on to what we offer. The quality of the property portfolio here, the size, the affordability of it, it really is cheap compared to other countries. And then, of course, the exchange rate makes it that much more affordable. So even just based on fundamentals, it's affordable, just based on the cost of building a property here. But if you then add the exchange rate effect, it's even more affordable.
Alana, just dovetailing off of that, do you think that we're perhaps doing enough at a country level to encourage that kind of investment in the country, at a property level at least?
Well, I can say that I'm not an expert in that space, but that was why this was such a welcome opportunity when we engaged Nedbank. I can personally say I had no idea that Nedbank for years has specialized in this space. So, hopefully this webinar will bring more attention and more awareness that we can make it, less of a more invested real estate opportunity. Okay.
And perhaps, Sparkly, on a more softer side, through ASA and the work that you guys are doing, what's the experience of South Africa in terms of the foreign nationals, particularly perhaps the Americans that are coming here? I mean, we can say that we've got great beaches, we've got great properties, but from the experience of those that are coming in, is it corroborating? Is it landing? Or are people just enjoying, coming to Sandton, doing the shopping, and then leaving?
Now, we do have a lot of Americans and non-American citizens coming through to South Africa. And a lot of requests that we always get is that especially hinders the investment. It's with their home affairs. For example, investors coming into the country, their vigorous process and the time period it takes for them to get documents processed with our Home Affairs Department. That's one of the biggest issue and a challenge, where you end up having loads coming every 3 months to South Africa to enjoy the beauty, but holding back in regards with investing their money into the country.
And Nikki, just on that sort of note around policy, without getting ourselves into a lot of trouble, how do we then get policy that encourages that investment? Are there things that we are able to do to ease up some of the red tape perhaps that may exist from an economy perspective?
Well, I think the bank can certainly assist clients or prospective clients in processing some of that red tape.
Yeah.
But it isn't necessarily going to make the waiting period any shorter.
Yeah.
Because the reality of the matter is that is one of South Africa's biggest constraint is just the failure in terms of providing efficient basic services. Electricity is just one element, but you refer to Home Affairs. It's not just a problem for foreigners, it's a problem for South Africans as well. And there are other areas where you will probably need the assistance of either a bank or somebody based locally to help you with, would be things like, registering for rates and taxes and sorting out your accounts and those sorts of things. So there's a lot of hassle factor. My sense, though, is although it's not good in South Africa, and although if government put their mind to it, they can improve these things and make a difference to people's experience, and they have the capacity to do so, I don't think that South Africa is unique in terms of emerging markets in terms of these hassles. So that would be my poor excuse I'll offer, that in relative terms, everybody's equally grey.
Yeah. No, sure. I think perhaps we move a little bit now, and thank you for those insights. And we'll definitely come back because there are some questions in the chat, particularly around the cost of living and perhaps how that would affect prospective buyers. But we move to an industry perspective now from Gregor Wichmann, who is an award-winning property practitioner, joins us on the line virtually at number 1 Remax office in Southern Africa. That's the Property Associates in Cape Town, the mother city with all the views. They've won top office internationally in a number of transactions as well as highest sales office consistently for over the past 20 years with a market share of about 60% in the area. He's originally from Germany, and perhaps he can tell us why it is that South Africa was appealing for him to settle as well and connected with the Remax network in that area. So Gregor, perhaps you could take us through from an industry perspective the state of the sector and what you are seeing. It would be Guten Morgen or Guten Abend, somewhere there. Guten Tag.
Yeah, it's in the middle, actually. Good afternoon.
There we go.
Thank you very much for having me and allowing me to represent an industry point of view. Obviously, for your American clients, I represent the Remax brand, which is a well-known brand in the United States. I think it's the largest real estate company over there. It started in 1973 in Denver, Colorado, came here in 1995. And we've just received our latest sales figures for South Africa. And as Nikki mentioned, the property market is definitely still buoyant. Remax just recorded 2.8 million rand in residential property sales for the month of July in South Africa. So that in dollars is also quite a lot.
Sure. And what are some of the interest areas, if you will? Is it really upmarket sort of properties? Is it people buying so that they can rent? What are some of the sort of, if you will, differentiators there? And perhaps you want to speak a bit about the commercial sort of enterprise that exists there. Is it just residential, or are there commercial opportunities that people are tapping into as well?
Yeah, that's a good question. The attractive part here for non-residents, for foreigners to invest, is that the entry to invest in property in South Africa is very low compared to other countries. So we're basically seeing investors from all walks of life purchasing properties. Some luxury properties, of course, as well, but some you're looking at $100,000 and you can buy a 1-bedroom, 2-bedroom apartment in a metropole area. And then one can see a trend that I've got a lot of German-speaking clients from Europe, and with the uncertainty that is going on there, with the continuous Ukrainian situation, ever increasing energy costs, they want to have a plan B. They don't necessarily want to live here, but they want to have a home away from home. So just something, if things go wrong, and that can be in the United States as well, can be anywhere in this crazy world we're living in, that Africa is geographically is quite a safe location. So we find there are a lot of people who just want to have a foothold here, and we can basically cater for all budgets. And the luxury market has got no ceiling. I mean, we list properties exceeding 100 million rands here on the Atlantic seaboard and in Constantia and in those areas. We don't get too much involved in commercial property, to answer your question.
And in that very same space, I mean, I think I was reading some of the prep for this that said spaces in the Northwest are renting on average at around $250 or so, compared to the Western Cape, which is almost double that, at around $500. Is this something that is also remaining quite attractive for foreign nationals, to say that it's relatively cheap, as Nikki was saying?
Yes, relative being the probably it's all relative. I mean, my son, I don't know if he's here on the chat, but he works along the Atlantic seaboard, whereas I work on the western seaboard, the Atlantic seaboard being more your coastal area closer to the city of Cape Town with high value properties. Their rentals in rand terms sometimes exceed 100,000 rand per month. Whereas on our side, you're looking at about 20 to 25,000 rand for a similar property. So again, it is really area specific. And what drives the current rental market is the semigration that takes place from up north, from Johannesburg, where you guys are, down to Cape Town. People don't want to buy immediately because they don't know the area too well. So they opt to rent and then find their footing and then hopefully buy again. And that drives the demand for quality rental accommodation, which in return increases the pricing.
Alana, maybe let me come to you on that area specific thing. I don't want to put you on the spot too much here, but what are some of the preferences that you are seeing with some of the colleagues, family members? Are people trying to holiday in Joburg but settle in Cape Town, which sounds very weird for a South African, but it seems that that may be a little bit of the trend. Do you see any areas of preference, particularly for people that are saying, I want to live in the country? Is it a Joburg sort of thing or more Cape Town?
Well, it's quite interesting. We've seen a lot of professionals move with their families.
All right.
And some of these questions came up just around them wanting to settle near schools that they find or where they work. We do get the casual expat that's coming here on a contract. Whether they're with a family or not, then they'll, kind of pick a home of preference and based on the affordability, be quite surprised by what they get. So it does vary, but I think it's pretty common that it's where's the school that, my child must go to, what's the best safe neighborhood to live in, and what kind of space am I getting, what kind of property am I getting for the value.
Gregor, to dovetail off of that, around the amenities that people are going to get quite close to the property that they are sort of trying to buy or rent, what are some of the neighborhoods that are really sort of doing well in your space from a residential perspective? And I'm asking this question because people in the chat have spoken about issues of access to water, access to electricity, and sometimes we know that from a political perspective, some of the Western Cape's sort of moves in terms of easing load shedding or easing some of those issues are a bit more advanced than those of Gauteng. So I'm very interested in finding out what are the areas that people are preferring there.
Yes. So my area is the Western Seaboard,
Yeah.
which is a coastal area. It's called the Blauberg area. And when we look at statistics, what people search for, that area ranks very highly on the search engines because it offers excellent infrastructure. It's a coastal lifestyle with good shopping, excellent schools, and affordable housing. And the only thing as far as service provision by the city of Cape Town is concerned, especially in regards to electricity, is unfortunately we fall under Eskom. And if you live closer to the city, you get the benefits of a lower load shedding schedule. So we're not really affected by what the city does as far as that is concerned. So there are other areas closer to the city which benefit from the city's efforts.
Fantastic. Please, to those in the audience, we remind you just use that chat function to tell us where you are streaming from. We know that there are people from Atlanta, there are people from Berlin as well. We know that there are colleagues as well here in Joburg. So please do write it in the chat box where you are definitely streaming from. I believe it's in the top left of your screen. You should be able to find it. But maybe let's localize in terms of the efforts that Nedbank has in this regard. And thank you so much, Gregor. We definitely will have a few questions for you later on when we do the Q&A section. But our next speaker is Susan Kemp from a Nedbank Exchange Control perspective. She's worked in the role for more than, or rather worked as a specialist in the area and at Nedbank for more than 15 years. So we're dealing with people who really know what they're talking about. And definitely her most rewarding years have been spent assisting clients to try and understand the regulatory environment. And she's worked with clients from around the globe, including the US, where she resided in New York City for about 3 years with a BA degree in international relations, but in her downtime enjoys traveling, and when she's not on her yoga mat or spoiling her fur babies, so she'll tell us a bit about that as well, she'll be found researching her next trip. But Susan, you first have to tell us which sport you enjoyed in New York and who was your favorite team, because Alana may have something to say about that. But over to you, Susan.
Thank you very much. International investors who are wishing to invest in South Africa are governed by the exchange control policies of the central bank, the South African Reserve Bank. One such Reserve Bank policy governs restrictions that are placed on non-residents when they borrow locally from South African banks. The local borrowing restrictions that relate to the purchase of residential property permit banks to lend up to 50% of the purchase price to non-residents applying for mortgages, with the balance of the purchase price having to be introduced from abroad. Foreign exchange converted to rand is what the Reserve Bank want to see. We refer to this Reserve Bank local borrowing restriction as the 1-to-1 ratio. R1 lent, R1 arriving from abroad. Non-resident investors who wish to purchase residential property outright with full funding introduced from abroad may do so. We do stress the importance to all our clients of keeping full banking records verifying the inward foreign exchange flow, as well as all the property purchase documentation for as long as their funds are invested in South Africa, because this assists them in ensuring that the disinvestment process at some point in the future is seamless. Expats, contract workers who are employed in South Africa who've been issued with the appropriate work visas are treated as residents for borrowing purposes. And the Reserve Bank policy permits them to borrow more than the 50% restriction applied to non-residents for the purchase of residential property while they are employed in South Africa. Upon their permanent departure from South Africa, the current Reserve Bank policy requires that they bring their borrowing facilities in line with the 1-to-1 ratio, which then requires that they have to introduce funds from abroad to bring in that extra up to the 50% that the Reserve Bank requires of non-residents. It is advisable for international investors to hold non-resident transactional accounts at a South African bank to facilitate the transfer of funds to South Africa for the purchase of the property and for the ongoing payments of property utility expenses on a monthly basis. In addition, if investors wish to rent out the properties, either on long-term rental contracts or on ad hoc vacation rentals via one of the international booking platforms such as Airbnb or Booking.com, they may do so. And rentals are permitted to, in these instances, to be deposited to their non-resident South African bank accounts, and the funds may be transferred abroad. Just to be a bit more specific, the non-residents have to provide copies of all the rental agreements to their South African bankers in order to fulfill the Reserve Bank requirements related to the conduct of non-resident accounts, and so that the South African banks know the source of the funds that is being deposited to the account. Digital access is available on non-resident accounts, and it allows account holders to transact locally to make all the payments related to properties, just as one example. Rates and taxes, insurance, the mortgage payments. Should investors sell the property at some point in the future and wish to disinvest the sale proceeds, the current Reserve Bank policy permits disinvestment, including the capital gain made on the property. And here again, we stress to our clients the importance of keeping that paper trail of all the documentation related to the inward flow of funds and the ownership, purchase and ownership of the property. Nedbank is in a position to provide non-resident bank accounts and exchange control guidance to prospective investors and to assist them in making the whole process as uncomplicated as possible.
Sure. I think there's a lot to unpack in what you maybe have said there. Maybe let me start with, I would assume that if the foreign national or expat or non-resident has the account, they now are in the process of renting it out to somebody. Should they want to do that, I assume that the person will then be using our local currency, put it into the account, and then you're saying it's able to go back to the
Yes.
to their country of origin. How would that sort of happen? What are some of the things that are needed in that respect? Because I would assume
Right.
there are declarations, there may be a tax obligation there or two.
Right. We don't speak to tax
Sure.
considerations. We encourage the clients to go to a tax practitioner.
Sure.
You know, it's not our area of
Yeah.
expertise. But what happens with a non-resident account, the account holder has a dedicated relationship manager who looks after them, and they would liaise with their relationship manager to assist in transferring funds abroad, keeping their relationship manager up to date with their rental agreements, and in terms of know your client, just making sure that the bank is aware of what their needs are, and how they intend to conduct their accounts within the ambit of the Reserve Bank requirements.
So, yeah, sure.
So the if they have a digital access to a non-resident account with Nedbank, surely they have got greater flexibility. It's not like every transaction needs to go with a huge amount of paperwork. To make international payments, for example, could they link a US bank account as a beneficiary to that particular account or not?
At this point, it's not available because of the Reserve Bank's exchange control rules that govern and monitor the flow of currency.
They have to work with a SWIFT code.
Yes,
that whole
and
process.
in their international payments, they do through their dedicated relationship manager. The digital banking allows them to make local payments, which
With ease,
yes,
yeah.
with ease.
Okay.
So I wanted to find out there. So there have been a few questions around sort of capital gains tax and issues of tax. So you're saying that it would be better that they consult SARS, tax practitioners, to be able to get that, because they wouldn't necessarily get that from Nedbank.
Yes. Well, on the exchange control
Yes.
side, we're not equipped to advise.
Yeah.
We're not tax practitioners, yes.
Sure.
They would apply to South Africa. If you had a property here, you sold it, you made a capital gains, you would have capital gains tax.
Yeah.
In South Africa, relative to many other countries in the world, it is still very low. And ultimately, you have the freedom to take your profit out if you choose to do so, with the necessary paperwork.
Sure.
That's what it comes down to. But you will pay tax.
You will.
Yeah.
Yeah. Sure.
May, something that just popped up in my head.
Please.
Around cases that we're finding with members. Just this property tourism. So they go to Cape Town, they're here visiting friends or
Yeah.
in Joburg, and they see a property that they can't believe the price, and they just want to invest in it. You know, they're not going to be here. They might have been here for 2 weeks. You know, I also get phone calls when people hear what the exchange rate is, and they know how gorgeous this country is, and they want to invest in a property. How does Nedbank facilitate, you know, investment like that people are going to go back to the U.S. or to the U.K. or wherever they're from?
Maybe let me make that question even more complex, just a little bit. Would those people require, for the sake of sort of guarding or holding their interests, a local person that would then look after that? Would that be easier to do? Or are they able to say, I got $500,000 and I want to invest in there and I need to put it in somewhere? Is that even possible? Perhaps the question. Yeah.
Well, yes, if non-residents wish to purchase property, you know, outright with cash and not using a mortgage to finance a portion of it, certainly, you know, the South African Reserve Bank would welcome the flow of funds in the investment into the country. And it would be in the interests of a non-resident who's not here to manage their property to appoint somebody locally to manage the property. Yes, I would think that the realtors would be the people to advise on that. And for their own peace of mind, to know that they have a go-to person, you know, who will be phoning them up and saying, the fridge is broken, you know, please can you send funds? We need to replace the fridge for the tenants that are moving in on the weekend. Yeah,
sure.
that sort of thing.
I think, and I want to maybe also ask around, because I think sometimes when people are thinking property investment, we're thinking all these ultra luxury, high-end properties, and that's okay, particularly with regard to this one-to-one ratio. If a person maybe let me ask, what happens in the event that a person would want to invest in a particular property but has like a 0.8 and not the 1? So the bank can come in, but their foreign funds come to a certain amount, which is not at that 1-to-1. Is there any service that they could get there, or would you encourage them that maybe they can't have that property? And I'm asking because I would assume that it's not just high-end people who want to come. There are also some middle-class people that want to invest, and they may not necessarily have all of those funds, or would we direct them to perhaps a cheaper property in that respect?
Yes, the 1-to-1 ratio is applied strictly.
Sure.
Maybe they could negotiate the price down in order to
Sure.
then
Okay,
meet
so
that requirement.
it's a
Yeah.
strict thing. You're not
Yes.
gonna get around it.
Yeah.
So it's all part of that closed RAND system.
Uh-huh.
Okay, you give one out, you've got to get one back. That's the whole idea, yes.
All right.
If I may ask,
Please.
then, since the Western Cape, I think it's a different market, and I can be corrected maybe, in regards with a lot of the wine farms, which are estates, is that 1-to-1 ratio still works, or is it different?
No, that would still apply if they were wanting to borrow. But then again, just bear in mind that a wine estate, depending on which portion of it they're buying, is not, a residential property. We've been speaking specifically to residential property. Yeah. So, there probably would be different businesses and companies attached to the purchase of a wine estate, which would be treated differently.
Is there anything we could say, perhaps just slightly around the commercial property aspect? If there are people that would want to get into that space, what are some of the rules that are perhaps there? If you could speak to some of them.
No, we specifically,
On
just
the
dealing with
residential.
the residential on the
Fantastic.
retail side.
Okay.
Yes.
Topic for a future webinar.
Yeah.
Nedbank is very big in the commercial property
Yeah.
space, but that would be under our corporate and investment bank.
Sure.
And they can certainly come in here and
deal with it.
explain. On commercial property in South Africa in general, what we've experienced since post the pandemic is very similar to the rest of the world. Office space taking strain, obviously, and there is relatively high vacancy levels where that is concerned. But in South Africa, generally, the sort of seasoned operators in that space know how to quickly adapt and change. And so we've seen very aggressive attempts to sort of refurbish office space into residential space. So that is happening in places like Sandton, in Pretoria, and also in Cape Town. So that has certainly helped, but there is an overhang there. And then demand for industrial property, very high, and probably will remain high. Things like warehousing, logistical systems, and so on. And that all relates to the system, the switch globally we've seen towards more digital transactions. And then the other thing that we do know from our own client base is that, interestingly enough, if you're looking for shopping centers or investing in office and industrial space in Cape Town, you'll probably do well, but you might do even better if you actually invest in little shopping centers in rural areas where the turnover and the returns are exceptionally good, and it's all cash-based. So we know that those companies that have big exposure in rural areas have done exceptionally well.
Sure. I think definitely some insights to be taken to your own members.
Taking notes.
As well. But we're definitely doing a lot in this space, and thank you so much for the valuable insights, Sue, and the rest of the panel. Remember, we're in a conversation, so please feel free to chip in. I think our last presentation or speaker for the session is our Nedbank Head of Resident and Non-Resident in Embassy Banking, Mepandelani. She's a proud wife and mother of 4 with an exceptional 23-year-long career at Nedbank. That's 23 years old. Just shy of how long I've been alive in various roles.
Wow.
In various roles, from help desk consultant right through to executive. So really working her way up, extensive experience in many aspects of the bank. The client service management has allowed us to move in the RBB space, coupled with her educational exploits at Gibbs and the Wits Business School, standing her in good stead for the role that she currently occupies. She's someone who enjoys giving back to the community, trying out a new recipe or destination. So she and Sue definitely travel buddies, but also hopefully landing a hole-in-one on the golf course while entertaining clients. We look forward to hearing about some of that. But Elalwani, what are some of the solutions that Nedbank has championed in this space? Over to you.
Thank you, Katlego. And I think listening to Alana, the conversation that actually led to us being here today is the fact that as Nedbank, we've got a dedicated business unit that caters for foreign investors. And the reason why we've got a dedicated unit, we understand that there is unique nuances that we need to take into consideration when servicing a client of that caliber. And if you look at our mainstream banking services offered across the country through our branch networks, they don't necessarily have the expertise that the likes of Sue would possess in terms of advising a client what are all the regulatory considerations that they need to take into account before taking up an investment such as a property investment. And one thing that one needs to bear in mind is in order to service that property portfolio, you need a local bank account. You will not be able to pay your mortgage if you are taking out a mortgage without a local bank account, because we cannot, collect the monthly debits from a foreign account. So that is the main consideration that one has to take into account. How will I be able to service that property needs and the requirements associated with maintaining that property? You need to pay for your levies. If you've got a domestic assistant in the property, you need to pay them in local currency, and you can only do that with a local account. So we encourage clients to first establish that local banking portfolio, whilst at the same time enlisting the services of Grego in terms of looking out for properties to invest in. And what we're seeing with most of our clients is we're seeing two types of investments. You see a foreign investor that does not necessarily have appetite to come and settle in SA. They would want to use that property as a holiday home. We see most clients coming in to settle in the country for as long as their holiday visa will permit them to be in the country. And for the duration that they're not in the country, they will lease out that property and generate some income, which I think serves both needs. The household needs, where you come mostly in summer to enjoy fantastic weather, and in the months that you're not in, you're generating income, which most of the regulations Sue has already addressed in terms of what is the governance that we take into account, particularly when it comes to movements of funds locally. The banking portfolio that we offer gives you the ability to bank at your convenience. So the digital access will give you the ability to be able to remotely manage your account, assisted by that dedicated relationship manager who is dedicated to your portfolio. So they will do what we call a needs analysis to understand, over and above that transactional account, what are some of the banking services that we offer that we can possibly consider in structuring your portfolio. And we do that in partnership with the exchange control specialists, because we are not subject matter experts in terms of understanding the regulation. And partnering with the likes of Sue helps us to give you informed facts that you need to take into consideration before you can invest in a property in SA. And for clients that are foreign clients working in South Africa, the regulation is slightly relaxed in that for the purposes and the duration of you being in the country, from a credit assessment point of view, you've got the very same rights and leverage that I would have as well. Of course, credit assessment is unique to that client's circumstances, so affordability would be taken into account based on your financial history and standing.
So I want to just double click on that portfolio of services that could be offered to that particular client, and not just this mortgage or loan. Does it necessarily then help the client to be able to settle in the country better, because everything from a banking perspective is taken care of in terms of that relationship banker?
Absolutely, Katlego. I think one of the major frustrations is as a tourist, you find yourself in a country where you don't understand the banking system. When you land in SA, we've got centers across all the major metros. We well represented in the Western Cape. We well represented in Gauteng. We've also got a dedicated help desk that would help you at any given point outside the traditional banking hours, should you find yourself, requiring banking services outside of the normal traditional working hours. And we encourage clients to set up that banking portfolio before you actually even arrive in the country. So our onboarding process allows for you to open an account even though you're not in South Africa. So one of our relationship managers will facilitate that onboarding process so that by the time you land here, your banking portfolio is already established.
Maybe, Nikki, to bring you in, and you made mention of it earlier, what does this really all mean for the economy? All this foreign currency coming into the country. Are we really at the place where we should be encouraging so much more of it to come in? I know from an investment perspective, it's just a tick, but sort of from an economic growth perspective, what does it look like? What does it mean?
No, I mean, South Africa, as I said, we have, if you look at South Africa's sort of foreign investment, we tend to attract portfolio investments. So it would be your large funds, your BlackRocks, your so forth, that would invest in government bonds or in the equity market, and either an Anglo-Plat or one of the resource firms or Checkers. So it would be your standard sort of listed equities and bond markets where you will see the bulk of the capital inflow. So South Africa highly dependent on portfolio capital inflows. What we need to see a lot more is direct investment. Now, buying a property here is direct investment. It may not have the employment benefits of somebody opening a factory or, and the transfer and the training that goes with it, but it is still a positive development, I think, ultimately at the end of the day. And it is still foreign capital flowing into your country, and every nation needs foreign currency. If you don't have foreign currency, ultimately at the end of the day, you can't buy your imports. And where many African countries, Latin American countries, even some Asian countries have run into trouble is the moment you don't have the foreign currency to buy the imports you need. So it is still a very positive development, and I think we can still see a lot more of it before it becomes an issue. It's not quite like Portugal. South Africa is miles away from that, where foreigners own such a big portion of the domestic stock that it is crowding out the actual citizens of the country. We're not in that situation or anywhere close to that. So I think there is still a lot of scope for growth.
And Grigor, maybe to bring you in there in terms of some of the stats that you are seeing in that Blouberg area and broadly perhaps in the Cape region, what are the numbers in terms of just some of the revenue, the numbers of people who are buying in that space, just to get a sense of the appetite maybe post-pandemic and maybe even more recently?
Yeah, I think that post-pandemic is probably the key word. I think the whole world has experienced something we never thought we would experience, other than war or something, where freedom was taken away from us, and that has taught them or basically that has catapulted people from global, made us actually more global, that wherever you were, you wanted out of this country going to another country. And immediately after COVID, the property market here in South Africa, predominantly, I'd say, in the Western Cape, it was just booming. Everybody wanted to come to the land where the sun is shining and where life seems easier than, for example, in Germany, where the ceiling has just been put down lower and lower. So now it's, as Nikki mentioned, it slowed down a little bit, but there's still a lot of interest from non-residents or foreigners to come here. I don't know the exact figures. I've just looked at demographics, who's buying, and the Germans, they have really taken to South Africa. And now I wanted to actually bring something to especially the American market, because the Americans are English speaking. So it's a lot easier to follow property laws, property trends, property lingo. For Germans who are more conservative and don't speak English, that's not our first, second language, to buy property in Africa, you know, that is a very, very positive factor to point out. So Americans have taken to South Africa, but the Germans have taken more to South Africa. The Chinese are coming here. The English have always come here. So when your viewers now listen to this webinar, they get bombarded with information from, you know, from Nikki, from Susan, and from Elewani. And obviously, I follow what they've just said. But if I was you know, just somebody, oh, I love Cape Town, I love South Africa, I just want to buy here, make it easy for me, you know. And let me tell you, it is easy. It is the same as if you were living in New York and you want to buy a property in Miami. And you get an agent, he rents the property out, you have income and expenses. And the nice thing with Nedbank or with the South African banking channels, they are very sophisticated. In fact, property and banking are two of the top South African, what would be the word?
Sectors. Or
whatever, they're first class, and they've been first class for a long time. So you find an agent, find a Remax agent, you know, you get some rental income, okay, and immediately, as Elewani mentioned, you have got access to other products. You put it in a money market account. I think there, the clients, they get close to double digits already. I think 8-9%. I think I'm speaking under correction. So your rental money is actually growing, and it covers all your expenses. And what our clients do, they do not send out the money on a monthly basis. They accumulate, let's say, for a year, and then make lump sum payments out of the country if they feel the rent is not performing or whatever, you know, or they want to have some money in their country of origin, and it goes quickly, and it is really easy. So buying property in South Africa is really easy, and it is really safe. The problem, as Sparkley mentioned, is the Department of Home Affairs. If we could get the Department of Home Affairs to do their job, I don't think they don't want to do their job. I think they just can't do their job. They need help from somewhere higher up in government. And if that is sorted out, we will see a booming property market, a booming economy, something we would all benefit from, because the appetite is there. Americans, Germans, they all want to come here. It's a country that has so much to offer, the problem is now if you want to stay longer than 3 months, like the swallows do, we call them in Germany the swallows. They come here in their winter to enjoy our summer and vice versa. So give them at least 6 months. That's what it used to be. We would get 6-month visa. I think it was 10 years ago. They changed it to a 3-month visa where you have the right to apply for another 3 months, but you have to be in the country to do so. So you need like an immigration specialist to assist you, because we don't want tourists here or investors to visit our Department of Home Affairs. It's not pleasant. And that is really, I think that's where we started off. That's the problem, is staying here. Buying is easy.
So we're clear that we want people to buy. Nedbank makes it easy, but we need people to help us help people to stay. And maybe I wanted to get a sense, Sparkly, earlier where you were speaking about this issue. So we're clear that it sounds like a visa issue. It sounds like a, what are some of the things that your members have told you are their pain points that perhaps we could have a conversation with Home Affairs about?
That is correct, sorry. Because you could imagine I'm here on a vacation, 2 months with family, enjoying it so much, you've invested in a property, then suddenly I'm forced to leave the country. And, by investing in a country, to feel like you've just been cast out for a while and come back, that gives you a question to, if you want to invest more, how safe it is for you. What if, and some people have experienced it, challenges in coming back into the country. And it could be from maybe as simple as overstay. Now you've got investment in a country and you can't even enter the country. What happens? What happens if the person passes away and he was the one, with all the documents or the legal side of it, it becomes an issue for their families.
Well, I definitely think it may be a conversation worth having. To you, Elelwane, and perhaps Grigor as well, you could comment on this. We've been speaking very much around sort of Europe and the US. Are we also seeing some of our SADC compatriots also investing? Some in the West East African bloc also coming through and saying, look, we want to invest in. How's their experience?
I think we're seeing a lot of growth in the rest of Africa, particularly, clients coming from Mozambique, Zimbabwe, Namibia, Lesotho to some degree as well. And I think what is helping us there is that we are represented in those countries as well through the rest of Africa region strategy. And we have actually partnered with those branches in those regions to facilitate the onboarding process of a client that is based in those countries. So we are certainly seeing growth in the rest of Africa as well.
Grigor, for you, are you also seeing the same? More of our African compatriots coming through?
Yes, we've also noticed that. And the problem, however, seems to be that some countries, especially Nigeria, I think, restrict the outflow of funds into South Africa, which as a property practitioner, if you know about it and you have clients who buy a property, a multi-million rand property, and let's say they're from Nigeria, you're a bit worried, how quickly can you get the money out? So I think it would be great if one would then have a partner like Nedbank, who has got representation, who could assist clients in these countries. Because I've had it a few times now that I think it was Cameroon, it was Nigeria, it was a few countries that they don't want their money to go out, but there's definitely interest, yeah, especially in Blouberg. I mean, we've got excellent private schools, and people from these SADC countries, they're normally the more affluent people who would invest here, and they send their children to the best schools they can afford. And once they're here, they need property, and funds need to flow. But yeah, that is my experience. A lot easier to send money from Germany than from Nigeria.
We hope that the Continental Free Trade Area may assist and other relations here on the continent. Please do remember to use the chat function. We're coming to your questions now. I think it's the top left, and you can definitely put them through. We have a few that have been coming. Remember, no one will be able to unmute themselves and ask the question, so you better get typing in that respect. It's the purple elephant in the room, Alana, and I'll come to you to perhaps really give us a sense on this particular topic of crime in the country, and is it deterring some investment in this space? We do know that we've seen some issues with tourists, we've seen some really nasty stories and the like. Are you seeing the crime levels in this country discouraging some of your members from investing in the country?
So first, I want to start by just saying that the American Society of South Africa is a social organization.
Yeah.
We are a safe space for our expats to engage with each other.
Yeah.
And just me as an example, I've lived in this country for over 20 years.
Yeah.
And I think that's where I want to leave it, that if I have been willing to stay in this country for over 20 years, every place in the world has a situation.
Yeah, yeah.
So, and I know that, you know, we're hitting a point of pivots and change. And that's kind of what keeps me here, the hope of seeing the change. Because everything has got to give. Something's got to give, and there will be a change. So I defer and plead the fifth on stating that, because we are a social organization, and we believe in the strength of our partnerships as expats with this country to make it someplace that we all want to live and invest in.
Sure. Jane asked a question, and maybe to you, Nikki, Sue, Elelwane as well. What about the increase in the cost of living? We've seen rates rise. You were speaking earlier around inflation. Do you think that could be a potential deterrent, or is it something that is not really negligible at the moment?
Yeah, I think in the case of South Africa, I think a very valid point made was that South Africa has got very good monetary management, very good banking sector. I mean, we're ranked in the top 10 globally in terms of the soundness of the banking sector. And so when you talk about cost of living, with the Reserve Bank really being a solid institution, monetary policy in South Africa is pursued in exactly the same way it is pursued anywhere else in the world, through a process of inflation targeting. Our target range is 3 to 6%. With South Africa being an emerging economy, with South Africa having its own unique history, given that we are quite far from our main markets, there's obviously a situation that our labour is not as productive as America's labour, or the UK's labour, or Germany's labour. And so we have our inefficiencies, and as a result, inflation in South Africa is higher, on average, over an extended period of time than it would be in a country like the US. That's just a fact. And will probably always be like that. But the Reserve Bank's aim is to stabilize it around 4.5%. Inflation, as I said, have now come down to 5.4%. So it is heading in that direction. The Reserve Bank see us getting there towards the end of next year, and in 2025, we should hit that 4.5% level. You compare that to a country like the US, where the target is to keep it steady at a 2%. I mean, inflation gyrates. It's not always at that level. And it's a similar story in South Africa. But I think relative to other emerging markets in Latin America, and certainly in Africa, our inflation is fairly steady. I don't think we have a cost of living crisis. We have been through the same experience than every other country in the world after Russia invaded Ukraine, where we saw oil prices rise, where we saw food prices rise, and the very same risk every other country face on that front, we also face.
Sure. Perhaps the question to Sue and Elelwane, and you could also perhaps defer it if we need to, but the question from Kenneth in Atlanta says, does Nedbank provide a line of credit for foreign investors who may need capital? I wonder whether that may be more of a CIB-ish. Are we able to provide that line of credit for those investors who need capital? I will assume, Kenneth, we're speaking around residential property that they want to invest there. Any word on your part?
So, if I understand the question, is it specifically referring to a private client? Because
Yeah.
that is the mandate that within which we act.
Yes.
If it is a commercial property, it would need to be deferred to our commercial division
Yes.
and corporate and investment banking. But from a private individual, we do have facilities. I think Sue touched on it in terms of the limitations. Every rent that we will lend, you would need to introduce that as a deposit.
Okay. So the line of credit is there, but on that 1-to-1 ratio,
Yeah.
as far as I hear it. We keep on getting this question around the tax implications, and I think earlier to your point, Sue, let's consult the tax practitioners that may be there, because I think earlier it was just around Airbnb, Booking.com, what are the tax implications? I think Nikki made a mention of capital gains as well that would be there, and so unfortunately you'd have to pay that. Yeah. Yeah. So I definitely, there's a reverse question now from Jane as well, and I don't know who would want to attempt this, but also maybe to you, Gregor. On the other side, we are speaking now about foreign nationals who want to come into the country, but what about South Africans that are moving abroad? And that was also a question that's been coming through, and I'm wondering, maybe Gregor, Alana as well, if you want to just touch on that, speak about if you're seeing trends in that respect, and maybe, I think from a Nedbank perspective, it may be just, I don't know, winding up of accounts and moving through to the other respect. But Gregor, Alana, just to touch on that a bit.
Yes, we are.
Yeah.
Go ahead, Gregor.
Okay.
Apologies. Go ahead.
No, ladies first.
Well, I just wanted to in a very succinct way, say yes, we are seeing that, and our membership base also decides to be a part of the American Society to get support and insight to go that way. So that's the kind of trend that we are seeing. Our members stay members so that they do have sort of insight of where they're moving to.
Sure. Gregor?
Yeah. No, basically, before I went into real estate, I had a recruitment agency, and we recruited staff for hospitality all over the world with a view of exchanging. And I think the whole world has become more global. It is a coming and going, and there are people leaving, there are people coming. At certain times, there's more people coming than leaving, but in general, I think it has evened out. It's not what some pessimists call the brain drain, and everybody's leaving South Africa, and they're all coming back in any case, because it's not greener on the other side. I mean, we get called for valuations. People need to sell their properties, and that is a bit of a gauge where we can see what's happening. But in the last few years, let's say, post-COVID, no, it's actually a reverse. There's more people coming in than out in our sphere, in our market.
Absolutely. I think that, please.
Come in as well. You do see some clients leaving the country, but they still have assets in the country.
Yes.
And I think, Sue, you can talk to the governance that one needs to observe in terms of how do you manage
that asset portfolio that still remains in the country? What are some regulatory considerations that you need to take into account insofar as formalizing immigration?
South African residents leaving the country permanently are required to go through a tax process with the South African Revenue Service to get themselves sort of cleared there. Their bank accounts are then designated as non-resident or non-tax resident bank accounts, and they are subject to limits annually from taking their funds out. And any assets that they leave behind, they also are, say for instance with property being a big one, they are also entitled to take out rentals on properties that they've left behind. And in some instances where they have income that's still being paid to them in South Africa, those funds can flow to them as well. But it's becoming more and more a tax-driven process.
Mm-hmm. No, sure. I definitely realize that part 2 of this webinar is needed around the commercial property space, because there are a few questions on the chat around the commercial property. I think I want to maybe just get into some closing remarks for us. Gregor, maybe we'll start with you. You're the only one that has a beautiful view. We're looking at chairs. So if you maybe want to just give us some of your closing remarks in terms of perhaps what your outlook would be for foreign nationals that are investing in South Africa. You said they're coming. If that would be your quote, they are coming, we need to be prepared.
Yeah, I think that's what all the panel members probably all agree on, that just facilitate them being able to live here for extended period of time. That will be number one. And I'm a born positive person, and I could have left. I came to South Africa in 1991. That's when people said to me, Gregor, you're crazy. There's going to be a civil war and all that. Yeah. Then came 93. Then I was able to vote at the first democratic election. I'm pleased to say that I could vote for the great Nelson Mandela. That was my first and only time I was able to vote in South Africa. After that, permanent residents are no longer allowed to vote, so that's a pity. I pay taxes, but I can't vote. That's a bit of a, something to consider. But having been here for so long, half my life, and I'm still here, and I could have also left on, like Elana also mentioned, you've been here for 20 years. I've been here for almost 30 years. And I have a passport. I can just leave. Why haven't I left? It's a beautiful country. It has got beautiful people. It has so much to offer. The quality of life you get here, you don't get anywhere else. So come. That's what I would say.
There we go. Sparkly Alana, I definitely think you would echo that statement.
Yeah, certainly. For myself, I left for the US when I was 19 because I believed that it was greener on the other side. Forgetting Nedbank is green this side. Look at me. And I came back, and I've seen a trend in lots of people that I know that have left for Australia, for the US, and everybody's coming back because you look at even the property size, you move to the US or UK, you live in quite a small, distant home, but when you back in SA, your children are able to run in your backyard. And so I'll say, go green, come back, Nedbank will help you to make the process easier.
Sure, Alana?
I just think the power of life is about purpose. And that was one of the things that has always kind of, kept me here, as well as family, but and partnerships, So I really just want to thank Nedbank for helping us with something that has come from many of our members that may even change their perspective on not just staying here, but investing in the country.
Sure. Nikki, on your front?
On my front, yes, I think that there's often a lot of bad news about South Africa. Emerging markets in general do have these problems. But I think the biggest and strongest arguments for South Africa in terms of property investment is that we have a very familiar legal system, a very good legal system. You've got legal recourse, and you've very sound banking sector. And that should already offer people a tremendous amount of comfort.
Sue?
I can just say that the banks are greener on this side.
Definitely. And finally, Elelwani?
I think from my end, I'd like to thank Sparkly and Alana for having created, a platform where we could be integrated into the conversations that you have with your members. And we are ready to do business, and we would like to appeal to foreign investors wanting to invest to consider us as their local preferred banking partner.
Thank you so much. If the grass is greener on the other side, the water bill is higher. So thank you so much for being an amazing audience. We must say a big thank you to Tams in Berlin and Kenneth in Atlanta and Tseho here in Joburg, our early birds that said where they were watching from, but we appreciate it. From ourselves, please have a very good evening, a good afternoon, a good morning. That's the beauty of the world we live in today. Ciao, shap shap.